Okay. Hello, welcome to the panel on mitigation and adaptation and financial instruments of mitigation and adaptation to climate change. We are here with three panelists that they're amazing in all the ways. So first, I will introduce themselves. Elvin Afandi. He's a head economist of policy and research in the Islamic Development Bank, and he used to be the chief economist at the Central Bank of Azerbaijan. And he's a PhD and postdoctoral in economics as well. Ali Usanase, sorry. She's the head of the country relations at the African Finance Corporation. She was a consultant for the World Bank in regional industrialization and exports, and she has an MBA from Brussels Business School. And Gangan Dingantara, sorry for all the names if I pronounce it wrong. He's the head of environmental and social safeguards and technical evaluation at the PT Savannah Multi-Infrastructure, an Indonesian state-owned company. He focused on infrastructure development financing. And he has a PhD in environmental management from Montpellier University. So thank you all for joining us today. First, I would like to pass the microphone to Alice, and I would like you to tell us a little bit more about the instruments, financial instruments the AFC is working on, and it's had been successful in the past years.
Thank you, Paola, and it's a pleasure and an honor to be here, and especially along my fellow panelists. Maybe we'll just introduce you briefly about AFC, especially for the ones who don't know about the institution. AFC is Africa Finance Corporation. It's a multilateral financial institution in Africa. We have a Pan-African mandate to develop, finance key infrastructure across the continent, and our focus is really productive sectors in terms of advancing the economies on the continent and make them much more industrialized. So we focus mostly on transport and logistics, power, with a focus on renewable. We still do oil and gas because of the continent where we are, and since the continent is still very reliant on commodity sectors, unfortunately. And we also do, obviously, heavy industry and telecoms. So when it comes to product offering, we actually do anything required for the project as long as it falls under those 5 sectors. So we do the traditional instrument in terms of debt, equity, mezzanine, bridge construction. So basically, we do the whole value chain of the project to make sure that we provide advice at the inception of the project. We provide project development expertise to make the project bankable. We provide equity to make sure we attract and leverage on other peers in the project. And we also provide long-term financing to tell financial close. And during the life of the project, we're also able to provide working capital. So when it comes to product offering, we do a 360-degree package for our client and sponsors.
Thank you very much. Thank you very much, Alice. Elvin, you want to continue and tell us a little bit more about your bank?
Yeah, sure. Thank you, first of all, Paula, for having me today here, and also great pleasure to having the great panelists with me here. For those who are not that much familiar about the ISDB, Islamic Development Bank Group, we are a multilateral development bank, basically working and operating in 57 member countries, dominantly from Africa, Middle East, Far East Asia, and a few member countries from Latin America, including Guyana and Somalia, Suriname. Basically, we have very much similar the investment offerings and the development offerings for the clients. We both serve sovereign sector, the governments, through our the mother institution, Islamic Development Bank Group, and also we have entities under the Islamic Development Bank, basically dealing with the different niches or the different aspects of the client spectrum, being it private sector, which is basically handled by the ICD that I'm coming from, the private sector development arm of the group. We have also ITFC, which is dealing with the mode of short-term trade financing, both in the sovereign and private sector. And we have ISEC, which is basically issuing credit letters and insurance packages for the member countries and clients. The full spectrum of the offerings we have, being it the short to long-term financing and also the equity type of financing we do, and also we have the established advisory offerings to member countries, both on the country level as well as the corporate level. So on the country level, maybe later in the panel we will talk, we help the member countries to issue bond. We call it in Islamic Finance sukuk, and also issue green bonds. And on the also corporate level, we basically help the clients, being the financial sector or non-financial sector, issue also the sukuk, and also be basically converted or open an Islamic window within the within the commercial sector to operate and serve mainly the SMEs for the funding. Specifically on the climate change side, the group is quite active with the energy transition projects and renewable energy projects, mainly those countries that we still see the bankability and opportunities. Like we have few projects in Egypt. Either we do it alone or with other MDBs like EBRD, IFC, on the wind, solar side, and we did also a number of big projects in the Africa region and Asia as well. So this is more of on the renewable energy side. But we also have the trade finance arm of the group, which basically where we do also attach the technology or digital solution to the climate change funding, which we have a cotton traceability project in Egypt, for example, where we basically support the climate-friendly cotton production projects through the whole value chain to basically allow the end users like across the world, sitting in the United States, any brand you buy, you can basically trace it all the way down to the farmer who has produced this, for example, cotton. So this is there's few things that I may maybe touch in this point, and in the later stage of the panel, maybe we can go in further details. Thank you.
Thank you very much. That's a very interesting project. So we can trace cotton all the way up to the farmers. Gangan, can you tell us a little bit more about your
Okay, thank you. First of all, I would like to thank you for inviting us to this session. PT SMI is a state-owned enterprise in Indonesia, owned 100% by the government, and we have a mandate to accelerate infrastructure development across the country. Actually, regarding the green finance itself, we just started in 2016. By the way, we were established in 2009, but since 2016 we established the Sustainable Finance Division, and since then we try to stop or reduce our coal-fired power plant portfolio and increase our exposure in the renewable energy project and other climate-related projects in mitigation as well as in adaptation. So at the moment, as September this year, the figure shows that around 3% our portfolio is still in coal-fired power plant, while for renewable energy and other climate-related projects reach around 11% of our portfolio. So I think it's good, and since we are new in this field, we also apply environmental and social due diligence process, and thank you to IFC and the World Bank and IDB, because we refer to those institutions, and also we got technical assistance from those institutions to develop our system in safeguard And fortunately, environmental and social safeguard aspect now is considered in our decision-making process, and and we yeah, step by step we try to positioning ourselves in other among other development financial institution, and just last week we got the reaccreditation process from reaccreditation status from the Green Climate Fund. Thank you.
Congratulations on the accreditation. And well, Elvin, can I ask you a question? I wanted to know how you capitalize on Islamic finance for climate change.
Yeah, sure. Maybe just a step back just to give a bit of definitional aspect of what is Islamic finance all about. I'm not sure that all they understand properly the same thing. Islamic finance by nature is asset-based, risk-sharing type of funding, where basically all the funding and financing should be attached to the asset. So you basically minimize the financial speculation end of the day. So from that point of view, the core nature of Islamic finance is built on the ethical and responsible financing. Though when you look at the realities, the penetration is not that much. Today, the total assets of Islamic finance in globally is around $3 trillion, and is projected to reach to 4 trillion by 2025. If you look at the share of the green financing within that, the total Islamic finance is less than 5% for the time being. So there is a huge room to go, and there is a big opportunity there. But also there's some challenges basically prevent us from fully penetrating the Islamic finance sector. But there are a couple of ready-made tools and mechanisms in Islamic finance which very well fit to the climate financing needs or the climate finance sphere. So one of them definitely is on the bond side, where you actually green sukuk or green bonds. It started its journey a bit late, since 2017. So far we have 13 green finance initiatives globally. It's still small, but we keep having more and more appetite and interest globally for this type of the solution. Especially for this time being, it's very popular in the Middle East, in Asia, like countries Malaysia, Indonesia, and in this part of the world. Also, we have a few countries, including like Morocco, etc. But in addition to that, there is also equity or direct financing tools, and the Islamic finance basically tailored for the climate change. And I can give you a few examples also, like we do as an Islamic development bank. As I said, since it's a bit of nascent field for the Islamic finance industry to capitalize on the climate sector part. We Islamic Development Bank Group, we do also a bit of the work on the ecosystem to bring a more conduciveness to the regulatory environment, to awareness of the Islamic finance for the climate change. And we do have, that's why, a lot of technical assistance, capacity building for different geographies to help the countries to build the regulatory framework and all the logistics and the structural the reforms to basically enable the Islamic finance for the climate change to flourish. So in addition, the private sector is indeed a bit challenging, especially for the Islamic finance to bring to the climate change. You know that globally is also the adaptation side of the equation is very difficult. So you have around like more than $300 billion of investment in the overall adaptation business by the private sector, and it's only 1 billion belongs to the adaptation side over the private sector. So that's the same challenge for the Islamic finance as well. We can't still have bankable projects on the adaptation side, but on the mitigation side is like the solar energies, wind energies, and the energy transition are quite convincing, and we do have the progress there.
Thank you very much. The next question is for you, Alice. How do you think greener instruments can achieve transformation and growth, especially in Africa?
Thank you, Paola. I think for us, what we're trying to promote, and I think that's something hopefully this COP has also made us realize, is climate is also a business. It's not a charity, if I can use that word, and especially from an investor perspective, when you start saying business, climate as a business sector, then it's easier to allocate the required funding for that. And for Africa, if you look right now, if you look at the supply chain, the pollution of the supply chain across the world is the 60th. If it was a country, it would be the 60th polluting country in the world. So which means that if we can look at how critically, how efficiently we can approach the current supply chain, then actually that will be a first step in terms of creating jobs, but also reducing pollution across the world. When we talk about energy transition, and especially around vehicles becoming more electric based, if you look at the materials required, 6 out of the 7 or 8 materials are actually based in Africa. If you look at cobalt, DRC, the Democratic Republic of Congo, has like 70% of global reserves of cobalt. If you look at countries like Zimbabwe and Namibia, they have the largest reserve in the world in terms of lithium. So, but right now, all the batteries for cars are produced in China, which means that there's a whole pollution of supply chain that is being done in terms of export of raw materials, which means that you're not developing the local communities, you're not creating jobs, you're not lifting the economies. They go to China, they go transformed, and then they are sold to the rest of the world. If there is anything that we have learned about COVID is that supply chain has to be diversified. And I think for Africa particularly, this is an opportunity that I hope our leaders will be able to pick up. And that's the agenda, particularly for ASU we're pushing, where can we not move some parts of the value chain closer to the raw materials? Can we make sure that at least in terms of production of part of the value chain in terms of the batteries can actually be done in DRC, in Zimbabwe, in Zambia? Why? Because then you're creating hubs, and if something is happening, as we're expressing with the Ukraine-Russia war, if something is happening at some part in the world, you also have another alternative. That's why we're having the gas crisis. If you look at some of the reserves in gas, I know Argentina has one of the largest reserves of gas in the world. Same in Africa. Countries like Senegal, like Angola, have quite untapped reserves of gas. So if from an investment perspective, those countries can be helped out to develop their natural resources, it's better for the global value chain, and then it will also reduce the pollution, will be much more climate, and it will create much more greener jobs. So which is why I come to the first point that climate is a business. I think when people know they can make money, they'll put money in those sectors. It doesn't matter whatever the name is given. And I think given how much of reserves, minerals we have on the continent, it's really an opportunity for us to push this global agenda to make sure that industries and transformation are localized and not just outside of where raw resources are.
Thank you very much. I'm really happy to hear about changing the productive matrix as well that you're thinking about. We're also in Argentina trying, and our bank is trying to as well, to add value to our production. I think we have a lot to learn about this. Gangan, what do you think are the main challenges for financial instruments and for adaptation and mitigation to climate change?
Thank you. Based on our experience in Indonesia, it's quite complex, the problem, since it is difficult to find ready to finance projects in Indonesia. A lot of problems behind that issue. So climate-related projects, particularly in adaptation, is considered as not bankable project normally because it's almost a cost. Yeah? So there is no revenue from the adaptation activity. For mitigation, there are several issues happen in Indonesia which cause this not bankable project, and it's difficult to find a good project. First of all, is the project preparation doesn't meet the financial institution standard. That's the first aspect, since maybe the quality of the consultant and many other aspects in the preparation phase. And the second one, if we see from the point of view of sponsor, project sponsor, normally we experience that the project sponsor can be qualified as the medium, low to medium enterprise, so there are lack of equity. So, so for us, it's, we will be very careful with that. And then the third one is from the bank perspective, there is no, they have limited financing products. So particularly only the senior loan. So how to finance, they have difficulty on how to finance this with several problems they face. And furthermore, it's about the supply sources. It's, if we talk about the renewable energy, for example, solar, wind, and biomass, we face the difficulty in providing a solid database. So it will then, from technical point of view, on my analysis, on our analysis, we face difficulty to ensure that whether this project is good enough to finance or not. And in terms of technology in Indonesia, we also rely on import. So, and it makes the project costs higher. And the last, the next issue is in the construction. We face a lot of cost overrun issue on construction process. And in the government side, we face also another issue in the licensing and also in the land acquisition. And the last one from off-taker. Since Indonesia is, we have only one single off-taker, so the project sponsor will face difficulty in positioning themselves in terms of a good PPA, power purchase agreement. So they are in the weak position on that. So those are make the complexity in this to speed up or to boost the renewable energy project as well as in adaptation projects in Indonesia.
Thank you so much, Gangan. It's you know, it's ironic how we all seem to have the same problems everywhere in the world, especially in the big countries. But it's good. I think that something that Alice brought as well, this about transforming, seeing the business side of it. But I understand, and since we have the same issues, I think we need to help, need to assist SMEs, especially when they are trying to apply to these kind of loans, to go a little bit further and assist them into how to formulate this project, how to think about this project. But this is something that is changing. So we don't go on a down note. I'm going to present Farah and Heike. Heike Rachel, she's connected. Well, she's the head of Investor Relations and Sustainable Finance in the World Bank, and her team is responsible for managing all the relations with with bonds investor, rating agencies, and financial media. And she has more than 20 years working in finance. And Farah Hussein, she is the senior financial officer at the World Bank Treasury. And she specializes in sustainable finance, including green, social, and sustainable bonds. Thank you both that you're connected there. Heike, you want to say a few words and maybe give us a really a nice perspective or an optimistic perspective of where we are standing?
Sure, I'm happy to. Can you hear me okay?
Perfect.
Okay, great. So thanks very much for inviting us both to speak, to listen to you. Of course, we're sorry that we can't be there in person, but well, with technology, this virtual participation has been made a lot easier. So my perspective is I work in the World Bank Treasury in the group that issues World Bank bonds. So bonds issued by IBRD, International Bank for Reconstruction and Development, and IDA, International Development Association. And as you said, the role of my team is to speak to investors who buy World Bank bonds. And it was really interesting listening to the panel. You know, the World Bank as a global organization, we have the twin goals of financing projects that help eradicate extreme poverty and boost shared prosperity. Now, of course, this has also been a big topic at COP. You cannot separate climate from poverty. So the World Bank is very focused on climate because it's so inextricably linked with poverty alleviation. We work with our members in many different ways in all regions in the world. So when we raise bonds in the capital markets, we focus on communicating what the World Bank does to our investors. You know, we raise for IBRD about $40 to $50 billion through sustainable development bonds. We have also been on a journey. I heard the panelists also saying that they were on a journey from the first green bond in 2008 to today. There's been such a change in how investors focus on how their money is being used. They focus on the environmental and social framework of issuers. They look for information that we provide in impact reporting. And we engage with investors to explain to them how the World Bank, for example, integrates climate into all of our activities. So that's a big topic. We also provide information and frameworks that we hope are helpful to the market. We recently published a paper that we worked on together with SEI, the Stockholm Environment Institute, that shows how we map our reporting for the impact to the SDGs, to the Sustainable Development Goals. So we developed together with SEI this automated text mining product that we published a paper on so others can use that. We also, and I'm going to pass on to Farah in a second, a lot of what the World Bank does in the capital markets is advisory. So sort of using the knowledge that we built up in the working in capital markets, issuing sustainable development bonds and green bonds, and using that knowledge to share it with others. My team focuses a lot on impact reporting, which is really the basis for this transparency for investors. And we see that investors really appreciate that a lot. It was very good for me to hear that some of the work the World Bank does is helpful to some of the panelists as well. So let me pass on to Farah.
Thank you very much, Heike. Hello, everyone. Good afternoon, good evening. Heike and I are both based in Washington, D.C., so good afternoon from us. So Heike and I work in the same department, but I work in a separate team. My team is the Client Solutions team, and we are responsible for working with our borrowers, mainly with ministries of finance, but also with other public sector borrowers to help them with their financing and risk management solutions. So I'm sure that you know that the World Bank has a full menu of financial products that we offer to our clients. And of course, that includes grants and credits and loans to low and middle income countries. On top of that, we also provide contingent financing to help our clients with their liquidity needs, and disaster risk financing, as well as risk management solutions. So specifically commodity risk management and also liquidity risk management solutions. And then apart from this, Heike mentioned our advisory services. We have a line of advisory services that works with our clients. So for instance, I lead our sustainable finance and ESG advisory services. And my work involves helping to develop sustainable capital markets in our client countries. And that means working with financial regulators across the world and helping them develop green and sustainable finance strategies and roadmaps and incentives, and basically try to divert and channel financing towards sustainable investments. So a lot of our work involves providing technical assistance to public sector borrowers to help them issue these sustainable bonds. So whether they're green bonds, social bonds, or sustainability bonds. And I'm delighted to be part of this panel with our colleague, Mr. Gangan from PTSMI, because we actually provided technical assistance to PTSMI for the issuance of their green bond in 2018. And I'm also delighted that our Islamic Development Bank colleague mentioned the Green Sukuk, because we helped to develop this instrument back in 2018, working with the Malaysian Securities Commission and Bank Negara Malaysia. So that's it. As Heike mentioned, we leverage all the learning, all the knowledge that we gain through our funding program by our presence in the capital markets, and we transfer that knowledge to our clients through our capacity building and training programs. Thank you.
Thank you, Farah. Thank you, Heike. Well, Farah, we are going to take you on your word and then ask for your expertise more often. Thank you very much. I think that one of the things that we can bring out of this panel is that we are all learning, and this is something very new. When we're talking about the first bond Heike was mentioning, it's 14 years old, so it can't even vote yet. So it's relatively new, but we need to advance really fast. We don't have time. We don't have time to waste. So I think that in this sense, all of us here, we are committed to implementing more finance, more instruments towards fighting against climate change. So thank you very much all for accompanying us here. Thank you, Alice, Efrain, Gangan, and Heike and Farah for being connected from DC. Thank you all. So, thanks.
Thank you for inviting us.
Bye-bye.
Thank you. Bye-bye.
Thank you very much.
Thank you. Just maybe just one word before we close. I think as a community of developers, we should make ourselves ready for both challenges ahead and also for opportunities. I see and over every time in the COP20s, COP events, we are talking about a lot the challenges and issues, but at the same time, a lot of new opportunities that is basically the echoed. So as a community of developers, I think we should be in all the ways to make ourselves ready for these challenges as well as the opportunities going forward. Thank you.
Yes, I think I also thank you for this session and for all inputs we have. And in the future, I think next future we need to find the most important thing is to find a solution for that. So a lot of innovative and creative instrument that can be developed to overcome that problem. Thank you.
Just maybe to a more concluding remark on our side. especially to what Ivan just mentioned, is and Gang as well, is really around the innovative instrument. Because when we talk about climate finance, there's two sections of it. So there's new asset that has to be created in a way to make sure that they're climate resilient, but there's also the transition of the existing asset. And especially for the transitioning asset, there's not so much product out there. And even if they are, they tend to be very expensive and not affordable to the average client. So I think especially with working with the larger multilateral development banks, as was mentioned by our colleagues from the World Bank, that's where actually the added value is, because the role of development banks is to catalyze the market. We're not the solution provider. Our job is to catalyze the solutions in the market that can be expanded by others. So I think definitely around adaptation and also transitions asset, especially in Africa. We already received the lowest allocation of climate finance in the world. I think only $30 billion allocated to Africa towards renewable energy and climate finance. But we saw recently Ukraine, they received about 33 billion to rebuild the whole country. Africa has 54 countries, and what is allocated is about 30 billion. Why one country is receiving that? So we just need to make sure also the allocation goes where is the most needed as well. Thank you.
Thank you all very much. It was a really interesting panel. Thanks.